The big ones we talked about are not the only ones that reported. So let's talk about some of the other financials that we heard from. BlackRock is one of them. That company reported earnings for the fourth quarter that saw the asset manager beat on both the top and bottom lines. However, profits for the quarter were down 18% year over year, and revenue for the full year was down 8% as well. Also, we got to talk about assets under management when we talk about BlackRock, right? Net flows into some of their long-term investment funds were $146 billion, which is above what analysts had anticipated. Total net flows, so that includes outflows from the cash management accounts, $114 billion. So overall, BlackRock now manages $8.59 trillion. But if you look at there, it looks like it is it's up down year over year, but up from the end of September. And CEO Larry Fink saying the current environment offers incredible opportunities for long-term investors. He did make a little bit more pessimistic comments about the broader economy on the company's conference call, guys.
Yeah, they also, and Sozzi, I'll toss to you in a second, record full year net new sales of Aladdin. That's their kind of software management side. That's the portfolio management software that they did have there, and continued growth services. And it'll be interesting to see where they invest more into some of their software plays, especially as they had already noted as they classified it, the modification in the size and shape of their workforce. But we all know that to be translated into some of the headcount reductions that we've seen.
Well, I might want to pull back on some of those investments, Brad. I'm looking at their adjusted operating margins down about 540 basis points year over year, in large part because that drop in assets under management and maybe expenses not coming down fast enough relative to that drop in AUM, as they would say. So a red flag there as well. And speaking of tech expenses, another little note from JP Morgan, too. Jamie Dimon saying they're not pulling back on their tech investments. And that has been a big source of contention on the street. Is it JP Morgan spending too much for technology that will position them correctly, maybe correctly over the next decade? I guess you could put that same question out of BlackRock.